I've made $21 million over the last 21 years, and if I lost it all today, if I had to start at ground zero and start all over again, this is exactly how I would do it. Now, I'm not going to give you exact trades to copy, but I am going to give you a process that you can replicate and do over and over as the years go on. Now, if you're new, stick with me. I've had a lot of students over the years that have come in brand new, and they are day trading or swing trading or long-term trading for their careers now. This is very, very possible to do without having any background. As a matter of fact, it's probably better that you don't have any background because you don't have any bad habits. I play golf. I played baseball through the semi-pro level, and I have this terrible, terrible habit of throwing my right shoulder when I'm hitting driver. Why? It's a bad habit. It's something that I struggle to get rid of. It's the same thing when it comes to trading. So come over to my chart here, and I'm going to show you kind of what I would look for when making a trade, walk you through a chart, and if I had $0 to start out, this is what I would do. I learned from a mentor, and he found a guy on the radio, ended up becoming friends with him, and we've chatted all over the past 21 years. It's been a really, really nice experience and somebody to have a shoulder to lean on or a hand to hold as I was learning this. So looking at this, there's a couple of things when it comes down to a chart. This is QQQ. This is the NASDAQ. My friend actually, what he does now is he doesn't pay attention to candles. I'm going to show you candles, but I'm also going to show you how he trades and how simple this can actually be if you stick to it. So the first thing that we're going to look for is this squiggly line on the bottom. This is your trend. So today, this is present day. I'm going to take you all the way back here to May. The trend tells us everything that we need to know. It tells you where the money is flowing. It tells you where the volume is going, where the buyers are going. Think of it this way. If you're trying to push yourself up a boulder up a hill, what do you need? You need a lot of people to push that boulder. That's the volume. It's showing you the general direction. If everybody starts pushing this boulder up the hill, it's the trend. The trend is that the boulder is moving up the hill. That's what you're looking for. The more people you have, the faster that trend is going to increase. The more people you have in a stock, the more buyers you have, the faster that trend is going to go towards the top, and that's what we're looking for. So the first thing that I always do when I open any chart is I look down here and I look at the trend and say, okay, what is going on with the trend? What is going to make me buy a stock, sell a stock short, participate in the stock? The next thing I do is I look up here at these candles and I say, all right, what am I looking for? Well, I'm looking for what's called an engulfing candlestick. And if we can zoom in here, you see a lot of different candles here. See some candles, let's just bounce around. You see some candles that kind of have these wicks on them. So the stock price kind of started right here in the middle of the day, ran up, came back down, kind of ended right in the middle of the day. That's the candle you see there. The candle you see right here started here, moved down, ended up closing the day right in here. Now here, you have what's called an engulfing candlestick. It's a big, full-bodied candle without any wicks on it that is larger and takes out the high of the previous day. That's the type of candle that we're looking for. Again, here, a large engulfing candle started here at the bottom of the day, ran all the way up, closed here at the top of the day. It was larger and it took out the high of the previous day. That's an engulfing candle. This here is an engulfing candle. Now, why is this candle more important than any of these that I showed over here? It's because of the trend. The trend was doing something special. If we look at the trend over here, let's pull out some whiskers. We see that the trend is on the bottom. It's not really doing anything. But over here, the trend is still below this red horizontal line. But here, when you have this engulfing candle, you notice that the trend is between these two horizontal red lines. What are those horizontal red lines? These are called the sweet spot. When you execute trades, you want a stock to be in this sweet spot area. That's the area where you have the highest probability to make money. Remember what trading is. Trading is not an exact science. You're not gonna win every single time. You could lose every single time if you don't know what you're doing. But if you follow this process, you're absolutely going to win more than you lose. And if you trade stocks when your stochastic or your trend is in the sweet spot, if you trade 100 times, 60 plus times you're going to win if you follow that same method. Yes, you're going to lose. You have to accept that you're going to lose. Losing is part of it, but you're mitigating the downside. There's stops that we can put in place. There's emergency levers that we can put in place that you don't lose as much money as you quite possibly could. So this was a beautiful trade, and this is where I would have started my QQQ position because I was in the sweet spot with our red line on top of yellow. It's very important that your red line is on top of your yellow, and you're getting an engulfing candlestick. Now, we know that if we pull this up and we go look at the volume, we were getting good volume coming in. Why? Because when you get an engulfing candlestick of any capacity, you're typically going to have pretty good volume coming in, meaning that people are buying the stock, people are participating, people are pushing that boulder up the hill. So before I go on, I told you that my friend or my mentor never used candles. So once he was in a stock, what he would actually do is, this is how important the trend is, he would completely get rid of the candlesticks. He didn't care about what the candlesticks looked like. He still doesn't to this day. Doesn't care what the candles are. Doesn't care what the ticker symbol is, doesn't care what the price is, doesn't care about any of this stuff. None of this matters. What matters to him? All that matters is one thing, and that is the trend. As long as you are in the sweet spot, you are in between 32% down here and 80% up here, he is staying in the stock. Doesn't matter what's happening during the day. The stock price could pull back $10, $15, $20, $30, $100 a share. As long as your trend is still in the sweet spot, he is still staying in this trade. And he's not exiting until at some point the red line drops back down into the sweet spot, going in the negative direction, meaning that the trend has switched and it's now a short. So the point in me telling you this is it's very, very important to trust that trend. My friend does not have anything to do with candles, with volume. After he's in the stock, all he does is pay attention to this. This is what how boring would that be? Just sit and just look at this all day. But it's pretty easy. All he trades is one stock all year. He trades QQQ all year long. That's it. Up and down and up and down. So if we're looking at QQQ right now, and I pulled this up for a specific reason back in May. We entered the stock in May. Great. Thing was moving through the sweet spot. We are still in this thing. You're still in the stock right now. Why? Because, remember I said, this needs to drop down into the sweet spot in the negative direction. We have not done that. So let's talk about a stock going sideways here above 80%. And why am I telling you all of this? I'm telling you all of this because you need to be able to trust the trend. The trend is your friend. Remember, if we look at this and say, okay, we got into the stock price right here, right? Well, it ran up a little bit, and then what? It came back down, and we were actually losing money. This was our entry point right here. Let me draw it in. Entry right there. It got down here. So we were actually losing money at some point. But why did we stay in the stock? Because the trend said don't exit. If you trust the trend, you're going to do well. And look at this thing. Since then, entry was at 520. It's got as high as about 580. Right now, we're at 564. There's really no reason to exit this thing. And the exit is going to be when your red line, I should draw this in red, when your red line drops below 80% and it starts to turn down. So that's the beauty of the long-term chart. Just stay in it. Stay in it and just keep riding the wave. This thing can go for a very long time. I'm going to pull up another stock. I'm going to pull up Google here. It was another great trade. Came through the sweet spot. Here was your add point. You were losing money for a little bit, but why didn't you exit? Trend was still in your favor. And look where we are now. This entry point was somewhere around $172 a share. Got up as high as about $210. You're sitting at about $201 right now. No reason to exit. Let's go over to something like Costco. If we go to Costco, and I like going to Costco and I like going back in time to here. This shows you how long you can stay in something like this. This was April of 2021, and you stayed in this thing all the way through January of 2022. You can stay in these for a very long time. Back when I was just starting, well, not just starting, but back when I was really, really going at it with day trading and I was supplementing some long-term trading, there were times with AT&T that I would be in it for 9 months going long and 9 months going short, 9 months going long and 9 months going short. That means that all you have to do is go to your chart once a day and say, okay, am I still in the sweet spot? Am I still a positive trend? Yes, move on, come back the next day. It really doesn't require that much work. And that's why I would choose this method of trading. If I was starting with $0 in my pocket, I would say, I'm going to go with long-term trading. Why? Because it doesn't require a ton of work. And if I'm just starting, it probably means I'm working a full-time job. I have a family. I have kids. I'm in college, what have you. I can't just sit on my computer endlessly outside of studying for when you start getting going. But I can't sit on my computer endlessly. All I want to do is take 5-10 minutes a day and make a supplemental income, or become a full-time trader, but I don't want to have to sit there and slave away on a computer. There is a way to do it, and this is how you do it. Now, a lot of these stocks that I've showed you examples of came from the Patreon community. It's a great place to have people to bounce things off of. It's a great place to find stocks. Admittedly, there's a lot of stocks that I trade and a lot of examples that I show on a daily basis, which I got from the community. It's a fantastic place to be. The link is in the description below. Click it, join it for a month. What do you have to lose? Just give it a shot. So I want to show you guys a trade that I am currently in. And this is something that I'm not expecting you to do right now, but it just gives you a little bit of a glimpse into how I look at things, how I look at patterns, how you can capitalize on stocks based on different patterns. This is CCL, Carnival Cruise. So if we zoom out on Carnival Cruise, what do you notice about this chart? Well, you notice that back in 2020, it fell pretty hard. And then what happened? It's never gotten back up here. Look at this. This is just, it's such a, all of this blackness area. Look at this. It's just negative pressure pushing down on the stock. Now you'll also notice, and I'll tell you a cool story about this. Here was, let me go here. Let's clear this out. Here was your high. That was your kind of last big high. Here was your low. This is your last big low. And then your middle ground is kind of about right there, right? This is called a 50% rule stock. 50%. Why do we call it 50%? Because here's your high, here's your low. The stock price can't get above about 50%. So back during COVID, I actually bought this thing down here around, I don't know, $8 a share or something. And this is how 50% happens. The stock price runs up, and all of these people that were in here at about $40, $50 a share say, man, I lost a ton of money. If I could just get half my money back, I'll be fine. I just want to get half my money back. They get half their money back. What happens? Stock price falls. Runs up again. If I can just get half my money back, I missed the boat here, I'll be happy. Stock price falls. Moves up, same thing again, stock price falls. Moves up again, same thing, stock price falls. I was actually walking in a park one day with my brother. It hit about $30 a share, and I knew based on the 50% rule that this was not going to go higher than $30 a share. I ended up exiting my entire position, and thank God I did, because it's taken years to get back to $30 a share. But even now, it's hitting $30 a share. And what did I do? I ended up selling short, meaning that I'm betting that the stock price is going to go down. Why did I do that? Because I know that that 50% rule is in place. The only way that this stock is going to break up and go to $30 a share or above $30 a share is if you have people pushing the boulder up. Do we have people pushing the boulder up? Do we have volume? No. This yellow line here is the average volume over the last 30 days. And look at the trajectory of it. It just keeps going down, 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 down. The less people that are buying the stock, it makes it impossible to go higher. It absolutely makes it impossible to go higher. Anytime you see a stock price going up, it has people buying the stock on a regular basis, on a day-to-day basis, 10, 15, 20 days in a row. You don't have that right now. Even the days that you did have buyers coming into it, you weren't even hitting average volume. So it's not going to go. So I ended up shorting this. It's going to be a great trade, and it's not anything more than I have experience. I've seen enough charts that I can do this on. Here's another example of one of those. And 50% it's like stealing candy from a baby. It's one of my favorite trades to make. This was another great one. This is Zim. It's a shipping company. Here's your high. Here's your low. 50% is right here, right? Anytime this thing gets to about, it's actually about $23 a share. Anytime this thing gets to $23 a share, what do? Regardless of what this trend is showing me, this is purely based on my experience, I go short on it. Why? Because it's not going to break through. It's a 50% rule. All this negative pressure pushing down on the stock, it's going to go down. And every single time it goes down, it's like taking candy from a baby. There are certain patterns that you learn to understand over a long period of time, and 50% rule is just one of them. I'm not telling you to go and just look for 50% rules and just start going short like a madman. What I am saying is this is how I would, if I had nothing and I wanted to start all over again, I wish I knew a couple of things, a couple of these very specific patterns that I could take advantage of on a regular basis that the rest of the world does not know. People probably see Carnival Cruise sitting at about $29 right now and saying, this is it. This is the time it's going to go through $30 a share. We're going to get back to $60 a share. There is no chance in hell that you're going to get to $60 a share. Why? The volume is not there. You have so much negative pressure pushing down on you. It's going to go down. It's probably going to go down to about $14, $15 again. It's going to happen. Same thing with Zim. When you get to 23, it's not going to 60 again. I'm sorry. It's just not. Unless you have a ton of buying volume, it's going to go back down to $12, $13, $14 a share. It's at 14 right now. These are the patterns that you need to be able to master, and you will become a great trader over a long period of time. Now, there's a lot of these different nuances and little tips and tricks that I have mastered over the years and that I am going to teach you. I made a full course. It's about 2.5 hours long. It's chaptered. So if you want to go see 50% rule, click 50% rule. If you want to go see this, you go see that. It's right here. It's 2.5 hours long. You need to watch it. Go check it out, and I'll see you on the Patreon.